Relying solely on cash as a store of value is often risky in an unpredictable economy. Due to inflation, cash can lose its purchasing power over time, especially during economic turmoil. While having some cash on hand for emergencies is essential, keeping significant wealth in cash could mean missing out on potential growth opportunities or exposing it to the threat of depreciation. These four assets are generally considered better than cash in retaining and growing wealth over time. 1. Gold and precious metals. Gold has been a reliable store of value for thousands of years and is often considered a safe haven during economic downturns. Precious metals like gold and silver tend to hold their value over the long term and, in some cases, appreciate, especially during inflationary periods. Investors often turn to gold when currencies devalue or geopolitical tensions rise, as it doesn't correlate strongly with stock market trends. Holding physical gold or other precious metals, such as silver, platinum, or palladium, offers several advantages. Inflation hedge. Gold retains value even as inflation rises, protecting purchasing power. Tangibility. Unlike digital assets or stocks, gold is a physical asset, which many people find reassuring. Global acceptance. Gold is widely accepted globally and has a stable regional market. Real estate. Real estate is often viewed as a foundational component of a diversified portfolio. Real estate investments can provide income through rent and appreciation through increased property value. Unlike cash, which might depreciate due to inflation, real estate generally increases in value over time, offering an opportunity for asset appreciation and income generation. Some benefits of real estate investment include stable and predictable cash flow. Rental income provides consistent cash flow, especially in high-demand areas. Tax advantages. Real estate investors can take advantage of tax deductions on mortgage interest, property taxes, and depreciation. Capital appreciation. Property values tend to increase over the long term, providing a natural hedge against inflation. There are different ways to invest in real estate, including residential properties, commercial properties, or real estate investment trusts, REITs, for those who prefer not to manage physical properties directly. 3. Stocks and equity investments. Investing in stocks allows you to become a partial owner of companies, offering the potential for significant returns over time. Although stocks are more volatile than other asset classes, they have historically provided high returns, especially if invested for the long term. Equities also offer dividends, which can provide regular income, similar to interest on savings, but generally with a higher yield. Why stocks are advantageous over cash? Higher returns. Historically, stocks have outperformed cash and inflation, making them one of the most profitable long-term investments. Liquidity. Stocks are relatively liquid assets, meaning you can buy and sell them quickly. Diversification. Stock ownership allows you to invest in various industries, sectors, and countries, reducing the risks of single asset exposure. Investors can diversify within the stock market, choosing from blue-chip stocks, growth stocks, dividend stocks, or exchange-traded funds, ETFs, that track indices. By diversifying, they can reduce the risk associated with market volatility. 4. Treasury inflation-protected securities, TIPS. For a conservative investor seeking low risk, Treasury inflation-protected securities, TIPS, are one of the best alternatives to holding cash. TIPS issued by the government are explicitly designed to protect against inflation, as the principal increases with the inflation rate. These securities are backed by the government, making them one of the safest investments available. Key benefits of TIPS include inflation protection. TIPS adjust with the Consumer Price Index, CPI, preserving your investment's purchasing power. Low risk. Government backing makes TIPS almost risk-free, especially compared to other bonds or cash, which may lose value in inflationary times. Interest payments. TIPS pays interest twice yearly, providing investors regular income and an inflation-adjusted principal. By balancing risk and return, TIPS provides a secure alternative to cash for those who prioritize safety and inflation protection. In conclusion, while cash is essential for short-term needs and emergencies, it's often wise to consider diversifying into assets that have the potential to grow or, at the very least, protect your purchasing power. Gold, Real estate, stocks, and tips each offer unique benefits and risk profiles, allowing investors to tailor their portfolios based on their financial goals and risk tolerance. For most investors, the right mix of these assets can help preserve wealth and build it over time, something cash alone cannot achieve in an inflationary environment.